Hello and welcome to this edition of Africa This Week, your wrap of what happened across the continent. I'm Mashudu Masutam. In this part of the program, we look at efforts towards lasting peace in Somalia and review the oil industry in Africa and abroad. World leaders have urged Somalis to seize what they call an unprecedented opportunity to rebuild their nation. Some 50 global policymakers this week held a day-long conference in London to secure lasting peace in Somalia. Andrew Atta Asamoah, a senior researcher at the Institute of Security Studies, discussed global intervention in crisis-prone Somalia.
I think that the renewed commitment at this moment is coming particularly because of the global recognition that the insecurity in Somalia is not just a Somali issue, but it's becoming a global issue in the sense that its rippling effect on global economics, as well as the direct impact on global security. And the fact that if Somalia is allowed to remain what it is going to offer, serve as a source of instability, not only to the country, but to the region, the continent, and to the globe in general.
Yeah.
And therefore, the renewed commitment in this particular context is coming because of the recognition that the issue has long ceased to be a solely Somali issue. It's now a global issue.
Yeah. What's your assessment in terms of the probable success of these talks? We've got some big hitters here. We've got the UN Secretary General Ban Ki-moon. We've got the British Prime Minister. You've got the US Secretary of State. We've got Goodluck Jonathan also attending. How likely is it, do you think, that we'll get a solution coming out of here?
I think the conference does not set for itself to serve as a silver bullet to deal with the issue overnight. I think what it actually sets out to do is to try and galvanize international support and also try and coordinate international support in dealing with the situation on the ground. So within the context that it is trying to galvanize support and coordinate existing support, the conference will succeed a lot in bringing the Somali crisis once again into the limelight and in trying to whip up support from across the globe in dealing with the situation. The situation is more complex than what many people think, and therefore we should not expect a less than 24-hour meeting to offer solutions that can wholly address situations or complexities that have existed for more than 2 decades.
Yeah.
But in a more realistic sense, this conference is going to serve the most important purpose of bringing attention back to the situation and in trying to tell the Somalis and the people on the ground that, look, there's international renewed support for the situation, and that the international system now frowns upon any attempt to derail the ongoing peace process, and that the people of Somalia are not alone in this crisis.
Crude theft has for a very long time threatened Nigeria's daily oil export. It is costing oil companies in the country an estimated 15,000 barrels per day. This accounts for about 7% of Nigeria's daily exports. Mutiu Sunmonu, Managing Director and Country Chairman of Shell, spoke to Umu Ibrahim about the implications of the practice for the Nigerian economy.
The whole issue of crude theft is more of a challenge to the nation than to the individual operators. And it is a challenge because of the colossal amount of revenue that is being lost to crude theft. I mean, we are talking about an estimated amount of 150,000 barrels per day. And that is a colossal amount. But on top of that is what crude theft is doing to the environment, really creating serious pollution in the environment, which will also take millions of dollars to clean up. So I personally believe that this is a big challenge for the government of Nigeria, and we have to address it at its root.
You've now connected crude theft to environmental degradation, but there seems to be a lot of blame game going on in terms of the environmental degradation in the Niger Delta, with many activists blaming Shell. Why should you be blamed for this?
Well, I personally believe that many activists do not have the right data at their disposal. Many activists believe that operators can control this crude theft, but I make bold to say that the oil and gas operators in the region have gotten to the limit of what they can do. Only government can actually stop crude theft in the region. And majority of the spill you see in the region, majority of the pollution you see in the region is coming from crude theft. If any activist is in doubt, I'm prepared to take them on a helicopter to overfly the region so that they can see for themselves the enormous amount of illegal refineries that have been implanted in the region. They can also see how crude theft is creating serious pollution. I don't think we should start to just talk about this anymore. People have got to be prepared to come out of their comfort zone and see things for themselves.
This year's conference is talking about the state of the Nigerian oil and gas industry, and you've been in the industry for quite a very long time now. What can you say about the country's state of oil and gas industry, particularly at a time when the country is faced with a lot of security challenges?
I must say that I'm very hopeful that the future is bright. And as I said at the conference this morning, we have huge resource base, 35 billion of oil reserve, 180 TCF of gas. So the resources are there. And government is also coming up with the right policies that will stimulate growth. So I think I am hopeful that we will be able to unleash, the full potential of the industry when all the pieces come together.
Do you feel safe in terms of investments in the country? Because a statement by the Minister of Finance stated that the current security challenges has not deterred investors from trooping into the country. How safe do you feel as an oil and gas company in the country?
I would say that the amnesty program has been very helpful. It has made field operations a lot safer, than it was some 5-6 years ago. So I feel reasonably safe. But I think it's important for us to sustain the peace.
We now turn our attention to the oil market and looking at forecasts for the oil price throughout the year. Hannah Vivier spoke to Dave Ensberger, Global Director for Oil at Platts, and asked what global conditions were keeping the oil price around the $120 mark.
There are two things happening today. One, as you mentioned, Iran over the weekend declared that it was going to stop supplying crude oil to Britain and France, two of its European customers, in advance of the EU ban that will come into place on all Iranian imports in July, Iran acting preemptively there. And that's certainly put a little bit of a wind under the wings of the oil market. But secondly, and also importantly, there has been some movement forward on the European Union's attempts to underwrite Greek debt, or at least rescue Greece from completely and utterly falling apart. They've agreed a package that by 2020 could cut Greek debt to something closer to where it's supposed to be. So the market is responding to a slightly better outlook for the European economy and some fear over what Iran is messaging to the market over the weekend.
Can Iran afford, though, to cut production to those countries that it's mentioned?
Well, Iran is engaged in largely a diplomatic debate at this point. It's not talking about cutting production. What it is talking about is taking its 500,000 barrels a day that it sells to Europe and finding alternative markets for that crude oil. So they under their plan, Iran would continue to produce at its current rates and simply find new markets for its crude. And principally, it's been targeting China, South Korea, India, already customers of Iran, and looking to those countries to take more of its oil. And the oil market being one giant bucket of oil, that means that other people's oil would probably come to Europe instead. So for now, it's kind of a little bit about shuffling pieces around on a chessboard, but the noises are unsettling for people.
One of the things that we've heard with commodities is that we could see a technical correction because we have been having this bull run. Do you think that's going to happen?
Well, it's certainly a possibility. You know, when you look deeper into some of the statistics that are being talked around the market, largely in analysis of the Iranian situation, the European Commission yesterday declared that it had enough crude oil in stock to cover crude oil and refined products in stock to cover at least 120 odd days, maybe more, of oil demand, assuming that all imports were cut off. And what that tells you is that the oil market is amply stocked. There's plenty of inventory available to offset a disruption in supply, whether it's a Strait of Hormuz closure, whether it's a Iranian export cut, although that hasn't been talked about, as I mentioned, but even in that situation. So yes, there's a possibility of a correction because the markets are well stocked and well supplied right now.
Let's talk a little bit about Nigeria here on the African continent. Not a dominant player, but quite a significant one. How do you think all this is going to affect its supply of oil in terms of if, for instance, Iran did go through with some of the threats that it's come up with? What would that mean for a supplier like Nigeria?
Well, Nigeria is a preferred supplier of crude oil into Northwest Europe. Already, most European importers are keen to get as much Nigerian crude oil as they can. For the moment, though, Spain, Italy, and Greece, which are the countries that would be most affected by an Iranian export cut, I mean, Britain and France is a sideshow, but those three countries, they're looking right now to closer to home. Libya has got more production coming to market, but Nigeria is a preferred partner. So most of these countries are hoping that Nigerian supplies can stabilize and grow. You know, Nigeria hasn't been producing at anything like the capacity it had in place 5 years ago. And the hope of the European consumer market is that Nigeria can stabilize the situation and lift its production progressively in the next couple of years. So there's an opportunity in the market for Nigeria to expand its partnership as a supplier to Northwest Europe because of what's going on here.
One of the things that's happened, Dave, with this Eurozone crisis, and we saw it as well when we were in that recession, a lot of focus on currencies. And one of the things that Iran said when we had oil hovering at around $147 to $150 a barrel, Iran had come out and said that one of the problems that it had when it came to the oil markets was that oil was bought and sold, pretty much traded on the US dollar. And there have been some conversation that happened on that. And Iran was actually proposing that perhaps we should change the currency in which we trade with oil. What's your take on that argument?
Yeah, it's an interesting one, isn't it? You know, when the U.S. dollar was having the beginnings of its serious problems about 3 or 4 years ago, just immediately after the financial crisis of 2008, that's when that talk of moving off the dollar became loudest. But in the meantime, every other currency has gone through some sort of serious crisis. There's genuine concern as to whether the euro, which has been talked about as the most likely alternative, whether that would even exist in a year or two from now. Now, obviously, you know, you would assume that it would still exist, but the existential crisis of the euro and concerns that the yuan could be revalued aggressively in the next few years mean that neither the euro nor the yuan of China are really alternatives that everybody can agree upon for now. So it looks like for exports of crude oil, the dollar is going to be dominant for some time to come.
After the break, more stories making headlines this week.